Hello guys, welcome back to my YouTube channel. It's your girl Ako Yvette in the building. In today's video guys, we are going to be looking at inventory valuation. That's the inventory accounting method, or you call it inventory cost flow. Yes, so we are going to be looking at inventory valuation. But before I start, I want to first of all welcome everyone into my channel. Thank you, my subscribers, for coming back to watch my videos. For those that are watching for the very first time, please do me a favor and subscribe. Please, as you watch this video, please do me a favor and give me a thumbs up. State a comment as well at the comment section. So now guys, we are looking at inventory valuation. What is inventory valuation all about? This is a method in which a company uses to determine its cost of inventory, and note that whatever inventory method a company chooses to use will directly affect the financial statement. Now, we are looking at three methods of inventory valuation here. We are looking at the Lifo. When we talk of Lifo, we are talking about last in, first out. We are looking at Fifo. Fifo means first in, first out. And then we are looking at WAC, which is the average weighted methods, or we call it the weighted average methods. All right, so we have the Lifo, we have the Fifo, and we have the weighted average methods. All right, so Lifo stands for last in, first out, and Fifo stands for first in, first out. All right, now let's look at Fifo. Fifo, this method assumes that inventory items are sold in order of which they are manufactured or produced. So the oldest inventory or products are sold first before the others in the industry. And this method is a method that is widely used. Yes guys, this method is widely used because most companies sell their product in order of how they purchase it. So what are they trying to say about this Fifo? Fifo method here simply assumes that whatever you bought first is what you are going to sell first. All right, so if you bought whatever, if you're running a business, the goods you bought first or the goods you produce first are the goods you are going to sell first before any other goods. Now, this method best represents the actual flow of goods in a business. Now, let's look at a simple example, guys. Imagine that you bought 20 t-shirts for 100 francs on Monday, and on Tuesday you bought 50 t-shirts for 150 francs. All right, and then on Saturday you sold 15 t-shirts. Now, with the Fifo method, it is considered that the 15 t-shirts you sold, the sale is made from the 20 t-shirt you purchased on Monday, which means that out of the 20 t-shirt you purchased on Monday, that 15 is sold out of it and 5 is left. So that is Fifo or method. So you first of all sell the first things you bought, like we have said about the example on Monday, where you buy 20 t-shirts on Monday, and then you buy another 50 t-shirt on Tuesday. All right, so now if you sell 15 t-shirt on Saturday, it is considered that the first 15 t-shirt you are selling is from the purchase you made on Monday. That's out of the 20 you bought on Monday for 100 francs. So you will have to sell what you bought on Monday first before you go to what you bought on Tuesday. So that is the Fifo method. First in, first out. What came in first is what you will sell out. All right, so that is just it about the Fifo method. So we will do the practical in another video, guys, where I will be solving examples and you will better understand. Now we have the Lifo methods. When we talk of the Lifo method here, what do we mean? We are talking about last in, first out. So Lifo stands for last in, first out, which means that what the goods you bought the last are the ones you are going to sell. So with the Lifo method, guys, the inventory lastly purchased is assumed to be sold first. So if we still consider the example above, where 20 t-shirts for 100 francs were bought on Monday, and Tuesday 50 t-shirts were bought for 150 francs. Now, if we still consider that example, and then we assume that we sold 15 t-shirts on Saturday with the Lifo method. Remember, is last in. What came in last is what is going to be sold first. All right. So now, using this example, you will see that out of that 15 t-shirt, we will be selling that 15 t-shirt out of the 50 t-shirts that were bought on Tuesday. The ones that were bought on Tuesday. Remember, we are dealing with the Lifo method. So you bought 20 t-shirt on Monday for 100 francs, and you bought 50 t-shirt on Tuesday for 150 francs, and you on Saturday you sold 15 t-shirt. As far as the Lifo method is concerned, the last in first out, you were considered to have sold that 15 t-shirt out of the 50 t-shirt that were bought on Tuesday. So you first of all say what was bought on Tuesday, because that was the last purchase. You first of all say what was bought on Tuesday before you now go to what was bought on Monday. So that is the Lifo method. You sell what comes in last first before you go now to the ones that were brought in first. That is the Lifo method. But with the Fifo method is first in, first out, which means that whatever that was bought on Monday is going to be sold first before what was bought on Tuesday. And with the Lifo method, what was instead bought on Tuesday is going to be sold first and then before what was bought on Monday. So that is just the Lifo and the Fifo method, guys, so you don't get confused. Remember that Lifo stands for last in, first out, while Fifo stands for first in, first out. Now, guys, we are going to discuss about the weighted average in another video. Yeah, so in this video we are just considering the Lifo and the Fifo method. All right. And such method, when we are talking about the Lifo method, so when we are talking about the Lifo method, such method is usually used when a business does not have much variation in its inventory. All right, so when a business does not have much variation in its inventory, that is where we use the Lifo method. Now, guys, the question is, which inventory valuation methods is right for your business? I'm sure many of you will be asking, now I'm running this business, I'm running this type of business. You're thinking, which method of inventory valuation is right for your business? Now, guys, what I would tell you is that the right inventory valuation method for your business will depend on some factors like the location of your business, whether your cost is going up or down, and how much your inventory varies. All right, so those three determinants matters a lot. Your location matters, your cost, whether your cost is going up or down matters, and how your inventory varies matters. Now, when it comes to inventory accounting methods, most business use the Fifo method because it usually gives them the most accurate picture of cost and profitability. But there is no one particular method we can say that it is best, since it all depends on the number of factors named above. Okay, guys, so what we are trying to say here is that we can't tell you that, okay, the Fifo method is good, the Lifo method is good, this method is good, because it all depends on a number of factors, which has to do with your location, whether your cost is going up or down, and also your inventory, how your inventory varies. All right, so we can't really tell you that, okay, this method is good for you or this method is not good for you, because first of all, you have to consider those factors first. You have to put those factors into consideration first before you now say whether you would like to use the Lifo method, or whether the Lifo method is best for you or the Fifo method is best for you. So the best thing to do is to speak with an accountant who will look into your business, analyze it, and tell you what to do. All right, and tell you what to do. So that is just it. If you want to really know which method is good for your business, guys, you have to speak with an accountant who has to come into your business, analyze it, look at the location, look at the cost, look at the inventory, and now determine which method will be good for you. Even though most accountants or most businesses use the Fifo method, but it doesn't mean that is the best method. Okay, it doesn't mean that is the best method. it is just widely used. All right, so for you to determine if you would like to use the Lifo method or the Fifo method, you will have to bring an accountant into your business. You have to speak with an accountant who will now evaluate your business, analyze it, and tell you which method is good for you and which method is not good for your business, since all these things depends on a number of factors. So guys, that is just it about the Lifo and the Fifo method. Remember, Fifo stands for first in, first out. It means the first good you bought are the one you first sell. Lifo stands for last in, first out, which means the last goods you bought are the first you are going to sell. So that is just it, guys. We will talk about the average weighted method in another video. Thank you guys so much for watching this video. Please do give me a thumbs up if you find this video interesting, and state a comment at the comment section what you have learned in this video. What does Fifo stands for and what does Lifo stands for? If you understood something from this video, if you understand what Fifo, the abbreviation Fifo stands for, and the abbreviation Lifo stands for, please state the meaning at the comment section. State what Fifo stands for and what Lifo stands for at the comment section, and let me know that you have listened to the video and you have understood something in the video. So guys, that is just it for the Lifo and the Fifo method. Now we are going to do practical examples where I will be solving on a board and you will be seeing how it is being solved. All right, how the Fifo or Lifo methods is being solved. Okay guys, so that is just it for today. Thank you so much for watching, and please do have a blessed day.